Hello, my name is Vaishnavi Ravishankar and I work at PRI, Principles for Responsible Investment, in the ESG engagement stream. For those who are not familiar with PRI, PRI is basically a UN-supported agency. We have over 1,800 signatories, more than 70 trillion in assets under management. So we help these signatories to incorporate environmental, social, and governance factors in their investment decision-making. So today I'm going to talk about a project that I'm running on corporate tax responsibility. I'll talk about the 3 C's of corporate income tax from an investor perspective. So challenges for investors, collective action, and constructive dialogue, and how these two can actually can help investors overcome some of the challenges. So investors are really interested in corporate tax responsibility, and that's what the survey said when we conducted one in 2015. It was identified as one of the top 3 priority areas for PRI to work on. But they're also slightly nervous, mainly because of 2 challenges. One, because of the complexity involved. So it's not easy for investors to navigate this issue without technical expertise and well-informed research. They also find that there's a lack of corporate income tax data that is being published by companies. So they can't actually make an accurate assessment of the tax risks and opportunities that companies face. And this does impair investment decision making. So I'm going to quickly talk about some of the publications that PRI has produced that has helped investors navigate these issues. So the first one was Engagement Guidance on Corporate Tax Responsibility. It was basically a guidance document for investors with the objective of providing much needed context on issues relating to tax. So providing a bit of an investor case as to why investors should engage on this issue. But also what it did is it identified some of the key ways that companies tend to adopt in aggressively planning their tax practices. It also helped investors frame their engagement dialogue when talking to companies. Then last year we supplemented this with the investors' recommendations on corporate income tax disclosure. It's a mouthful. So this is basically guidance for companies who are looking at improving their tax transparency. We want to encourage more comprehensive corporate tax disclosure against key indicators such as tax policy, governance and risk management, and reporting. So we've gone through the challenges. Now I want to talk a bit about the collective action and constructive dialogue. So before we do that, I want to talk a bit about the investor case for engaging on corporate tax responsibility or transparency. Why are investors interested? First, it is a material issue. So it impacts on profitability, and therefore investors want to understand how much their portfolio companies' future cash flows rely on genuine economic activity and how much of it actually relies on artificial tax structures that may be challenged in the future. Investors are concerned about their portfolio companies actually contributing to economic inequality. When they use aggressive tax planning practices, they erode tax bases of the countries in which they're operating and thereby stymie economic growth and development. And then there are a number of risks that emerge when companies adopt aggressive tax planning practices. So this can take the form of legal, reputational, earnings risks. And so investors want boards to avoid focusing on tax minimization strategies and focus on broader economic opportunities that are available in the market. So in this context, PRI is coordinating a collaborative engagement. What it basically means is we bring together a group of investors to talk to companies about key issues that are relevant to investors. So in this case, corporate tax responsibility. So we have 35 institutional investors who are part of this project. They represent 2.9 trillion in assets under management. And they will be engaging with 50 companies in the healthcare and technology sectors about their approach to tax. I get asked a lot why we've chosen these 2 sectors particularly. There are a number of reasons why. One of them is that they tend to use quite a few aggressive tax planning mechanisms that are related to their intellectual property. So they tend to move their intellectual property from high tax jurisdictions to low tax jurisdictions. they also use other strategies that basically limit their tax burden based on physical presence or intra-group transactions. There's also evidence to suggest that these two sectors have a high tax gap, which means the difference between the effective tax rate and the statutory tax rate. So if this is growing and persistent over a period of time, it is a key red flag for investors. There are also other arguments that can be made. The stakeholder scrutiny and the tax authority interest is also another area of focus for investors. So hence we've chosen to focus on these two sectors. In order to facilitate this engagement dialogue, we have published a document very recently. It's called Evaluating and Engaging on Corporate Tax Transparency. What it does for investors is basically it highlights some of the key research findings from a study that we commissioned on corporate tax disclosure. It also helps investors structure their engagement asks based on observed trends in reporting. So what did the study say? The first finding is not surprising. So commonly reported tax indicators that we find in public disclosure were largely driven by regulatory requirements and accounting standards. But saying that, there was quite a bit of difference in the quality of disclosure that we were seeing from these companies. There was also discrepancies of gaps that we saw between what companies were reporting and what investors were expecting. I can illustrate these with a couple of examples. For example, in relation to tax policy, you would expect a company to at least provide a list of commitments around their tax approach, but that was not commonplace. Similarly, a lot of companies that were required to publish their tax risks in their 10K reports only provided very basic generic information, which was not detailed or organization specific. And we'd be surprised to know that none of the companies that we looked at produced a country-by-country report. So what this means is investors cannot actually evaluate whether the taxes paid and the scale of operations tally. And they cannot actually test the commitments around profit shifting that companies may be making. And this is a serious issue. Okay, so we've talked about challenges and we've talked about collective action. I want to finally talk about the approach to dialogue as to, so what would investors be doing? What will investors be asking companies? So in our project, the focus will be on 3 or 4 indicators: tax policy, governance, risk management, and reporting. First of all, we are encouraging investors to ask all of their portfolio companies to produce a tax policy at the minimum, which is organization-wide. We're also asking investors to ask their companies to talk about and articulate their approach on identification of tax risks and how they're managing it, because this doesn't come through in reporting at the moment. We'd also like to see them present examples around what is acceptable and unacceptable tax transactions and how they assess it or appraise it internally. We also want to see some country-by-country reporting. So we're asking investors to ask their companies about what information they can produce. If they're already providing quite a bit of information to the tax authority because of the OECD BEPS template in each of the jurisdictions, then there's a dialogue to be had around what information companies can potentially provide and what would be meaningful for investors in their investment decision making. So this is where we are at. The dialogue will be ongoing and investors will be contacting companies in the next few months. So if you would like to read a bit more about the report, I suggest that you go on the PRI website, www.unpri.org, and also you can follow us on Twitter at PRI_news. Thank you very much.